Hello and welcome. Joining us today, a very special guest all the way from the US, Anthony Saliba. He's a renowned and seasoned options trader, a technologist, a creator, inventor in his own words, and yes, he's made a difference to a lot of technical traders out there and the way they function today. So great to have you in our studios today, Tony.
Thanks, great to be here.
So, markets normally follow momentum. They follow that whole symptom of the trend, the greed, those kind of pockets. Now, given the current scenario and given how most traders today are so much more informed, they have so much more technology, everything's becoming a lot more automated, how then has the role of the traditional trader changed?
Well, it used to be where you could arbitrage information, and today that's ostensibly taken out due to the fact we all have a lot of information and very current information. It's about filtering it. The role of the individual trader has changed quite a bit in that they've been made to be more like professionals of the old with new technology, better trading tools, faster information flow, and more reliable market data. So today's active trader, retail if you will, are nothing like that of 15 or 20 years ago.
And do you feel that there are a lot more sophisticated, a lot more evolved? Has having all that information made them more aware?
Yes, speaking generally, obviously new traders getting into the market, there's a learning curve, there's a technology curve, but definitely there are professional or semi-professional traders that fall into this area of retail or sole proprietor traders that are much better than in the past.
Okay, so tell us a little bit about your story, Tony. Going back now, I know you've had years of some amazing experiences. What was your first 100 million trade, let's say?
Well, I started at a time when there weren't any computers involved in trading. For many years, it was all by hand. And I started very slowly and smallly, which I still recommend to anybody getting started trading, and sort of grew up by having the market sort of come to me, meaning that I honed some skills that were very small and deliberate and disciplined, and then all of a sudden the market got very busy, and I found that those skills were transferable into larger, bigger orders. And I would say that it was within a couple years of starting trading that I was doing very large trades. In fact, multi-million-dollar trades repetitively during the day.
Amazing. So when you look back today, were there some big mistakes that stand out as well, things that you learned from?
Absolutely, and that's a big key for people just getting started, and even those who are experienced. To me, past is prologue, learning from your mistakes. I think keeping a diary or a journal or a log of the things that you do as an individual, to learn from your own personal habits or traits, and then correct those the next time the situation presents itself. But yes, I had some fairly harrowing times early on that I learned from and made it better for me the next time they occurred.
Any story or experience that comes to mind that you can share with us?
Well, there were occasions where, for instance, now we're just past the 32nd anniversary of the big crash, the crash of '87, where the market was down over 20% in one day. Something close to 6,000 point move today in the Dow for one day. That the traders that were using theoretical valuations couldn't function. Volatility had risen past 100% to 200% to 300%, and I had to kick into gear using relative pricing, which is still today a fallback for people who trade options.
Okay, so you mentioned the crash. Now, in today's scenario, where do you see another opportunity like that? Going long by going short. Where do you see the next big opportunity?
Well, so I did a piece in Milan a couple weeks ago about unknown unknowns. So we have, known unknowns, known knowns, and then also events like a Brexit or Donald Trump being elected, where it becomes a outlier. And there are opportunities. They can be expensive, though, in terms of your time decay or theta when you're trading options. When it may happen, it's hard to say. But today, I think the most crowded trade, so to speak, is selling volatility. Whenever it pops its head up, they're mostly professional traders jump on it right away, and it seems to be reminiscent of portfolio insurance from the 80s, which is what caused that crash.
Okay, so how would one protect oneself from an unexpected development today, which is so possible given all that's going on in the world right now?
Well, as far as so the difference between protecting yourself from that or taking advantage of it, I recommend that anybody who's trading with their own capital to do your what ifs, if you will. I pride myself on doing a lot of what ifs, and to manage the capital that you're working with through a series of what if analysis. So that would be the protection part. But in terms of being able to take advantage of it, there are trades on the board that with some analysis, some technical analysis, you can see break points and find option spreads that have a long leg capability. And the hardest part of that is maintaining the being able to pay for the theta, being able to pay for the time decay. Now that takes additional spreading or actually actively trading around it in your portfolio.
Okay, and where do you see the most crowded trade today?
Well, the short volatility trade, at least in the U.S. market, that is in the option space. I'm not that well versed on other products or other instruments, but definitely the rapid selling whenever volatility gets over a certain level seems to be a little overdone.
Yeah, so do you think that the U.S. in particular is reaching a point where it's peaking out currently? Do you see a big fall coming?
I don't actually, at least not on the short term. I'm not a market analyst, and I don't call the markets. But my personal view is that there's a lot of easy money, and that it's the best opportunity on the boards right now. The U.S. market is humming pretty steadily.
Okay.
And I think you have some higher highs to be had.
Okay. Okay, so you're actually seeing that continue. Okay.
I think there's a lot of interest in buying dips, if you will. So what we had a year ago, where the market sold off till Christmas Eve, and then basically had many weeks of rallying after that, I don't think you'll see that this year. But like I said, I'm not a market caller.
Tell us, perhaps two historical patterns that have changed. For instance, interest rate volatility is less, or there's less of a trade in crude. What are a couple of the key shifts you've seen over the last few years?
Well, for instance, the popularity of a handful of stocks, the Fang stocks, for instance, become a bellwether, and literally they're, a handful of tech stocks that seem to go in one direction, and that's up. But yes, I think there's been a major shift away from traditional analysis in traditional trades that were very meaningful, just a short time ago.
Sure.
That doesn't mean they won't come back, but right now that's not the case.
Okay. And normally historical correlations used to make sense.
Yes.
Now we're into the era where they don't always make sense
Can't
at
depend
all.
on them, right?
So how do you then predict what's coming?
Well, so not being in the business of predicting, just being in the business of taking an idea and implementing it most effectively, I would say that using option spreads, you're able to refine your direction most accurately. We use scaling techniques to move into positions at better prices, and I think where we start is with an idea. We don't necessarily create the idea.
Okay, give me an example.
Well, so if you have a directional bias, which may be the opposite of mine, doesn't mean you're right and I'm wrong, but we would work with, or our ideas are to utilize options in the best way for you to implement your strategy, even though we may be doing the same thing on the other side, expecting the opposite move.
Sure.
All right, so whether you think oil is going to make new highs or not, we will help show you oil spreads that would be most efficient and most properly addressing that idea that you have. Now we work with idea generators, market technicians that have ranges that they expect, and that in and of itself won't make you money. You need to know how to implement that in the market.
Just on the Fang stock, since you just touched upon them, do you feel that they're overvalued, just as an onlooker, someone who's seeing what's happening to some of those businesses?
Well, if you would have asked me that a year ago, I probably would say yes, because they seem to be astronomical, but they continue to surprise, and it seems to be that they're in their own orbit. I mean, they're each their own monolithic companies, but yes, they find new ways to make money, and it's hard to buck that trend.
We had Japan in the 80s, we had China last century, US currently. What's the big idea, let's say, for the next 5 to 10 years?
Well, I still seem to think that I think the US has thrown off some shackles that it's had over the last 20 or 30 years, in that whether you love it or hate it, this current administration has cleared a path for American companies. I have a number of companies that I can tell you the regulations have been reduced, and that it changes the game quite a bit for American companies. So I don't see the American exceptionalism changing anytime soon. I think that at least for the foreseeable future, that's the trade, and being in the U.S. Equity market.
Where does India fit into the overall global picture currently?
Okay, so that's the powerhouse that's growing up right now in terms of a lot of the changes that are being made here currently. I've done some looking into the options business. It's very reminiscent of the options business in the U.S. about 20 years ago. Now the difference is there's a lot of great technology coming out of India. You have some government regulation, inability to trade other markets, and a big factor is the margining systems that are being used, but those are changing very quickly now too.
Okay. So you're excited about India?
Yes, absolutely. That's why we're here. Yeah.
Okay. And how does it stack up vis-a-vis, on one hand, something like a China, but also on the other hand, other emerging markets?
I think it stacks up really well, particularly against China. I mean, we've spent a lot of time in China, and they have some structural problems, political problems. I think they're going to have a hard time getting over that don't seem to be happening here. I think that there's a lot more trade that's going on right now locally, and I think once some of these regulations loosen up and the addition of a more effective margining plan, I think it's going to rocket ahead.
Tony, you know, when you were making all these million-dollar, multi-million-dollar trades, you must have been very young at that point. You're still young, but you must have been very young at that point.
I was very young, yes. I was in my early 20s.
So how did that feel? This is like Wolf of Wall Street all over again, kind of.
Well, I mean, we looked at ourselves as very fortunate to be, you know, in the right place at the right time, but also there were a lot of challenges because there were plenty of mostly young men, but some young women that didn't cut it. So we look at it as sport, and it was, you had to prepare. You had to prepare a lot for the battle that you did every day. But yeah, I mean, I took it in stride. I tried to give back whenever I could. I got involved in exchange matters, but it was exciting. I tried to use my success for good. I've given a large portion of my earnings over the decades to charities and other benevolent causes, but hired lots of people and tried to provide. But it was as a single young man, it was very very nice.
A lot of people must have wanted to learn from you and understand. You know, there's always that curiosity. You know, do you have that magic on your fingertips? How did you manage? What made it click? I mean, what would be your advice to some of the other young traders?
Well, that's a great point, Abba, because mentorship is, centuries old, and is still the most important thing today. Not that I knew what I was actually, mentoring when I was trading, but I did take my clerks and try to teach all of them individually to learn what I felt and saw in the marketplace. And then I started a company to train people. And today, the most popular and biggest growing aspect of the retail market is mentoring in terms of educators or signal callers or content providers, however you want to call them. Somebody who you can connect with, who speaks your language, so to speak, to be able to have a good rapport with.
Sure.
And I've always believed in that, and I think it's a very meaningful way to learn. Ancient ninjas used to learn by taking up mentorship, and that is also the case with professional sports teams, where even though you have training camps, you're usually partnered with one of the more senior players to sort of get the lay of the land. So it's very, very important.
Absolutely. So are there any particular methods which help, particularly in handling risk, handling the highs, the lows? What would you advise?
Well, so a big question is, well, how do you deal with short-term failures,
yes.
right?
Yeah.
So money management to begin with is an important aspect to mitigate the size of those failures. And when they happen, you should brush them off and get back on the horse, so to speak, and reduce your size and learn from your mistakes, but not be overly bold jumping back in, but also not be afraid. So I think it's important to try to take a holistic look at things. Easy for me to say today, but when it happened to me the very first time, when it was somewhat of a devastating realization, the idea is I'm going to quit, but not to do that. So good preparation, lots of homework. Even if you're trading algos, keep track of what you're doing, review that, it goes a long way. It's the little things that we kind of set aside. We were in a push-button world with our iPhones and such. But get back on the horse and review what you did and
get going.
Get going.
So discipline is important, of course.
It's an overused term, but it really is important. Yes, I think it's important to write down what you do and have a actual printed a set of even if it's 3 or 4 things you're going to do and follow them.
Passive versus active investing then, just to sort of...
Great question as it relates to options, for instance. Both types of traders can benefit from the proper option strategy very well. If you're a passive investor, meaning, well, a truly passive investor has somebody else doing their trading or their investing for them. But if you want to take a more passive approach to your own investing and kind of set it and forget it, there are option strategies that would allow you to take a longer term view and have options work for you. You don't have to be frenetic at options trading. Active, on the other hand, where we specialize, there are great tools to make it easier. Some are already implemented in the marketplace here, and I'm more on the active side because you can correct mistakes more readily.
Okay, and share with us, something about your method when you used to, trade. Perhaps, I mean, what was something that you used to do?
I was a scaredy cat, so to speak. I was always very risk averse, meaning that if things really went upside down, I had limited risk, but I had unlimited upside. And on multiple occasions, dozens of occasions, I was able to take advantage of big moves, whether it would be in the stocks that I was trading or the indexes I was trading. And that's not always that easy to take advantage of today because of where I was and trading order flow, which allowed me to sort of pay for my time decay, but I was always long options.
The big question then, when it comes to options trading, is fundamental analysis more important or technical? And why?
Except for around earnings season, earnings times, fundamental analysis is not as important to an options trader as technical analysis is, because you can swing trade, find points of entry and exit a lot easier and place strategies around them. But then when it comes to earnings season, to at least have an eye towards fundamental analysis becomes important. Technical analysis and options trading are really married very well in terms of how they can function together.
Tony, has there ever been an index or a stock, even if we may not be too familiar with it here in India, but one or a few that have been lucky for you?
Yes, I traded a stock called Teledyne, and it was very lucky for me. It was very tough to trade. It was very illiquid. I respected it very much, and it paid me back by not hurting me, but helping me.
Amazing, and that's something that you traded in over a long period of time?
For a long period, about 7 or 8 years straight, and I learned a lot of lessons from it. It was like riding a bull.
Tony, it's been a pleasure. Thank you so much for joining us, and great
My
having
pleasure.
you with us.
Thank you.
Thank you.
Mm-hmm. Great.